Hello, everyone. Welcome once again to another edition of Under the Macroscope, our weekly catch-up with various members of the Skybound Capital team, but most often with Chief Strategist Jabir Sadawala in the UK office of Skybound Capital. And during the past week, Jabir presented one of his very interesting sort of macro updates for the group. And there were two themes that really emerged from that report as being of particular interest. So we thought we'd explore those further. Coming up later, we'll address the issue of demand for resources and how that's affecting currencies globally. But first, we're going to talk about the global vaccine program, and perhaps more specifically, Jabir, some very interesting data you have come across around natural immunity and aligned with the vaccination program and how that is having a positive effect.
Yeah, so good morning, everyone. And that's right. So what happened here was there's obviously been a lot of talk now about the vaccine rollout, and we've had the G7 summit here where they pledged 1 billion vaccines doses to go to EM World. And so it just got me thinking, because it made me actually go back and revisit a commentary from the start of this year, because that was following a report that I came across that Goldman Sachs had produced. And in that, they did their own estimates of what they thought natural immunity levels were around various parts of the globe. So by natural immunity, I'm now taking into account, people who have had the virus and who have got their own natural defense, as opposed to people who have had vaccines and acquired their natural defense in that way. And back then, that report that they did, which was to the end of last year, 31st December, which is based on estimates. So I appreciate that there's a margin of error in this, as they point out also. But their analysis is based around two things. First, it's based on estimations using domestic antibody surveys and fatalities, and also estimations from excess fatalities and antibody surveys in comparable countries. So there is, you can see that there is some room for error in this. Nevertheless, I think it's still meaningful because they've applied a science to this and statistical analysis. I think it's reasonable as well because by 31st December last year, we had quite a lot of data already on COVID. So if this analysis had been soon after COVID had actually broken out, I think everybody would have been treating it with caution, but it's not. This is a good 9 months or so after the outbreak of COVID. And in that, across a span of countries, what's interesting is that from the developed world, where their estimates were quite low of natural immunity, it starts to rise as you go up across the EM world. So for instance, midpoint South Africa, they estimated 19% would have natural immunity. And then at the far end, they had Peru on nearly 40%. And it generally fits in with the way things are played out. And certainly, speaking to yourself and others down in the Cape Town office, it kind of matches the approach to lockdowns and dealing and tackling with the COVID situation. So my thought, when I heard the media portrayal of how things are absolutely dire in EM world, and without any hesitation, the Western world absolutely needs to get vaccinations across to them. There's no doubt about that. But it just made me go back and revisit this because I thought we're now almost 6 months on, and it's most unlikely that those numbers will have stayed the same. They will have undoubtedly gone up. And again, talking to people down in South Africa, yes, you've had your own lockdowns, the different stages, but the reality is, people still have to get on making a living. And it's more acute down there than it is up here. We've had lots of assistance from the government. You know, across the EM world, I would say that that assistance has been negligible. So the spread in 6 months must surely have taken these numbers up way higher than what was being reported back then. Is it unreasonable to say that they've doubled? I don't think it is. So is it possible that South Africa is now maybe closer to 40, 50%? I think definitely. In fact, I would say it's quite probable. So then when you look at actual estimates of the vaccination program, based on actual data as well as projected, you know, South Africa, again, in a more recent study by Goldman's, they project that South Africa, by the end of July, will have been 10% fully vaccinated. So you take that 10% on top of whatever one now estimates for natural immunity for South Africa. And I think we're already at a very high number. We're not at herd immunity level, which is the holy grail here. And that goalpost seems to be moving all the time. Not in a manipulative way, but I mean, you know, we're trying to, it has to change given the measures that are in place across the globe. But now 75 to 85% is the latest projection, certainly out of America from Fauci. So we're not there yet by a long shot, but I think we're a lot closer than the way people are talking about the problem. Which means that, you know, can we deal with this year? Yes, absolutely we can. There are, of course, caveats to that. If we get a strain that completely throws the vaccines that we have, that's obviously the single biggest worry. It's got to be. You know, look at the problems we're having here with the resurgence as a result of the Delta strain that originated from India, and all on the basis of just opening our borders with India just for a few days. And it's certainly spreading quickly up north in the country. So subject to that, I think it's very doable. And in terms of the vaccines that are available, I think all bar one have received approval and are being rolled out. The latest ones, like the J&J, is even easier to deal with. It's a one-shot vaccine and very easy to store. So the picture is still gloomy, but it's not as gloomy as everyone makes out.
I think what would also be enormously helpful is less misinformation and more verifiable information about vaccines, how they work. You know, there seems to be so much talk about, oh, well, if I'm vaccinated, I'm safe. Well, no, I mean, a vaccine doesn't stop you contracting or even transmitting, but it makes the effect of the virus that much less virulent.
Absolutely, totally agree, and people that's right. You know, people forget that there are different stages. I know the Oxford AstraZeneca vaccine has come under a lot of criticism, but I often see that vaccine as a very British response to dealing with a disease issue, the stiff upper lip approach. So look, you know, it's you might come down with feeling unwell, but where the vaccine really kicks in is that it reduces the likelihood of it becoming serious. And if it does get serious, it reduces even further the likelihood of death. But none of these things are foolproof. But at the end of the day, if you've got something that will greatly improve your chances, you know, then from a risk mitigation point of view, it's you've got to consider it.
So, Jabir, a strong emerging market theme in that vaccine commentary, staying with EMs, we've spoken in recent podcasts about relative emerging market currency strength, and much of that discussion has centered around interest rates and so on. But there is another major macro factor, which you brought up in your review this past week, and that's demand for commodities, which has a natural positive influence for a lot of the EMs.
Yeah, correct. And you know, that's where, if you want commodities, then pretty much that's where you've got to go. That's their stronghold. It always has been. So this started because I was just reviewing commodity price performance for year to date. So this is till last Friday. And, we're seeing some stellar returns yet, typically bunched around the 20 to 25%. And then you've got energy, which is around 40%. Oil, as we know, is having a huge time. Granted, it fell heavily last year, though. And yet, despite that, we're hearing everywhere that there's no inflation concern, or that it's transitory and things will get back to normal. So I just started having another look at this, and I began by taking the latest growth forecasts. Now, the Fed yesterday came out with an upward revision on their own growth for this year. They've taken it from 6.5% to 7%. That's much more in line with what was always considered to be bullish forecasts, and possibly excessive. Well, they're not looking excessive anymore. Those bullish forecasts, particularly for the US, are looking very good. The UK, for instance, is now projected to achieve in excess of 8% this year, arguably one of the best in the developed world. So it just made me think that with those kinds of growth forecasts, and with the kind of performance that we've seen so far year to date, what does this mean for the commodity complex? And then, as luck always plays its part, I stumbled across a lovely chart that actually looked at the commodity price index since 1795. So, yeah, I don't think, yeah, I don't think there's anyone around from then, but, this sort of looks at the Napoleonic Wars. It then looks at the first depression in 1824, things that I never even knew about, to be honest. And it's a technical approach, and I'm always wary of technical analysis. I've never really bought into it because it all depends on where you start joining the dots. You can draw any picture you want. And in that, they do go on to say that, inflation sets a new high. What I find intriguing about this is the way commodity prices come back every time you come off an extremely low base as a result of an external event. That event typically is either war related and or depression related. And usually a war follows a depression. So in the past, we've had World War I, then World War II. This time around, we've had a very different war. That war is called COVID. We don't know how long it's going to last for, but it will certainly be around for some years, and it's something that we're just going to have to naturally deal with. And so in this chart, what it's basically saying is that given where we are and the picture, the trend is very stark, what it's saying is that we're coming off yet another low base, the lowest from that date range. And as a result, it's got room to really rally. And based on their projection, it's only halfway there. They're in the way that they've joined the dots, which is the caveat that I would put here. That's the big thing that one has to be aware of. They're saying that it's still got another long way to go. And they're even implying from this, which I don't agree with, that inflation will be mid double digits. I don't think it'll get that far. I think the world has advanced too much to let it get that far. But I do think that, by the way, we had that in the 70s, with the oil crisis twice. And this chart shows it very clearly. So I think certainly a higher level is what's coming out of this. So I just began looking at various themes. What is the commodity complex made up of? It's basically energy, it's metals, and it's food. So starting with energy, I just looked at global primary energy consumption by source, and still dominating by a landslide. You've got the hydrocarbons, really by a long shot. Even if you take out all the others, wind, solar, geothermal, hydro, biomass, take them out, 84% of the world's demand for energy comes from the hydrocarbons. And with those kind of growth rates projected, which, by the way, others are now beginning to come round towards, there's a new consensus forming. hydrocarbons are the most elastic form of energy out there in terms of meeting demand. And we're not even back to the old demand levels yet. We're still encountering lockdowns of sorts around the globe. So bear that in mind that, I think there's still room for this to pick up. Whereas the commentary I'm reading is that for the past 2 to 3 months, the inflation we've seen has been mostly attributed to energy, which is quite right, but that it will pass. Well, I don't think it's going to pass quickly. It will pass, but not quickly. So that's the first point. Secondly, the changes that we're seeing across the globe in energy demand, the declines have been mostly across developed world. The increases have been across EM world, which makes sense because that's where the demand is. So if you look at energy and agriculture, there is a correlation here. Agriculture is a very confusing mess because it's made up of multiple parts. Energy is just one. Last year that broke down because energy prices collapsed, but agriculture still started shooting through the roof. So why? Because there's another component, a critical component, and that's weather related. So you had rising food prices in 2020 and even steeper food price increases this year, which the FAO is getting very concerned about, Food and Agricultural Organization. And when you look at the components, vegetable oils, cereals, dairy, meat, sugar, they're all rising, just different rates. So that's the point on food. Very difficult one to predict because energy can really, weather can really throw it. Last but not least, metals. This is industrial, precious metals even. And let me just pick on one theme, and that's this whole business about electrification and electric cars. Came across a chart that looked at the requirements, the burden on minerals and metals, just for batteries, because after all, that's the main thing about EVs. And lithium just dominates. Basically, in about 20, 25 years from now, we're going to need nearly 30 times more lithium. Okay, so this goes into the issue of supply and demand. It also, to get this stuff out of the ground, you need electricity, you need power. So it's a vicious circle. And I think it's safe to say that this move towards the new green energy is not going to give up. Look at Biden and look how he's pushing now for yet another stimulus. Infrastructure is going to be a big thing. Is copper the new gold or the new oil going forward? Because 50% of copper usage is in construction. You still get some in cars, also in internal combustion engines of cars. It goes on and on. So I would argue that as a consideration, a really important consideration for asset allocation, think about what the trends are. I've only named a few of them. Think about the trends. Think about the demands that places on underlying components, energy, food, and metals. And also think about country. And I think this is where emerging markets come back on the map. We haven't seen the end of them. And with it, I think you'll see a strengthening in their currencies. So for an external investor, you're looking at potential gains on both sides, the fundamental level as well as the currency level. And there's an impressive list on that, Brazil, Colombia, China, Indonesia, Mexico, South Africa. All these countries have some very lucrative minerals under the ground. And I think they're back in demand.
And with that, Jabir Sadawala remains a South African bull.
I do. Yeah, definitely. It's, if I could only pick one market, South Africa has to be, it is top of the list simply because, it ticks the boxes that Western allocators look for. It's got a fluid convertible currency. You can hedge it. It's got all those qualities, but at the same time, under the ground, it's got everything that the world needs. And, and it's got transparent markets too, regardless of what the government does. There's a lot of transparency there.
And from what you've said today, there's going to be consumer demand and also demand on the infrastructure spending side. So some good signs and some really fascinating macro themes to keep our eyes on in the weeks and months going forward. So as always, Jabir, thank you for your very in-depth views. And if you want to catch up with the Under the Macroscope podcast, all the past editions are available at Skybound Capital's website, www.skyboundcapital.com, or you can download the podcast on Apple, Spotify, and the Google podcast platform for Android. Until next time on Under the Macroscope.